Thank you very much for the entertaining introduction. I was complaining the other day about how boring mining intros are, so this is a huge improvement. I think I'm a better mineral economist than I am a bass player, so I'll leave you to judge over the next 10 minutes. I'll leave you to judge over the next 10 minutes or so. So look, thank you very much for having me here, and good afternoon. I realise that things are running a little bit over, so I'll try and be fairly quick today. I'm going to deviate a little bit from the usual slide format, largely because I've given a sort of this presentation a little bit before, and we've had one of those years where you just have to get your head down and do the work, and we really absolutely have done the work. And so the next few months are going to be really exciting in terms of deliverables. All of that hard work over about a 12, 18-month period is starting to come to fruition. And so what I'm going to do for those people who are new to the story is I will recap a little bit, but primarily I'll talk to what we've done over the last little while and what we're really delivering over the next 6 months or so. So I'll draw your attention to the usual disclaimers and then sort of give you a quick introduction for those of you who are new to the story. So Coda Minerals listed in October 2020. We listed really primarily focused on our more advanced asset, which is the sedimentary copper cobalt mineralization. We are located in what is arguably the world's premier copper exploration jurisdiction. So we're sandwiched just between Oz Minerals and BHP, which is about to become BHP, one assumes, and we're just 40 kilometers to the west of the Carrapateena project, just down from Oak Dam West and Olympic Dam as well. So it's not just neurology. Over the period from listing, we've turned 250,000 tons of contained copper equivalent into 1.1 million tons. So more than a four-fold uplift in the JORC resources, plus a significant amount of exploration success as well. In terms of the focus, this is unashamedly and primarily on the Elizabeth Creek project, which really hosts two projects in one, which is the sedimentary copper cobalt, the more advanced project, and the higher risk, higher reward, slower burn, very exciting IOCG discovery as well, which we've been following up on. We also have tenure in Cam River in Queensland and in Victoria as well. But again, as I said, the real value drivers coming here from the sedimentary copper and the IOCG, as well as the upside exploration here. Talking briefly to the corporate structure, we have a very tight structure, just 140 million shares on issue, share price bouncing around 24 to 26 cents at the moment, market cap of 36 million, enterprise value of about 29. We have $7 million of cash in the bank, so we're well cashed up. And the work at the moment is it's hard work, but it's fortunately low cost, which is also very helpful for cash conservation. The board owns a reasonably large percentage of the register, around about 15%. Keith Jones, 5% shareholder, he's our chairman. He's put over $1 million of cash of his own money into the company. The board just cut a check for over $320,000 last week as part of a recent raise as well, so all bought at market prices. It's a well-supported company. We have a lot of focus on here, and it's a fantastic team. Now, I've realized somehow the board slide has found its way to the appendix, so I'll just talk very briefly to who is involved with Coda. I know a lot of you are familiar with this already. Keith Jones, chairman, former chairman of Deloitte Australia as well. Colin Moorhead, who's in the audience today, one of Australia's most experienced exploration geologists. He's on the board of multiple companies, Eris, Xanadu, Ramelius, Ohio. He's also on the phone to me for on average about 4 hours a week, I'd say, and it is time which is way above and beyond the call of duty and hugely appreciated. Robin Marshall, Paul Hallam, they are feasibility and operations experts. Those of you paying attention to the first slide will realize having feasibility and operations experts is very useful when you're about to deliver a scoping study in 6 weeks' time. Now, I often say this, but never trust a company that spends half of its presentation talking about the market. So I'll spend approximately 1 minute talking about copper. I believe very strongly, personally, for my own career, for investing, and for the value of our shareholders, that copper is the right place to be. As a mineral economist, most people get supply elasticities wrong. Mineral economics is all about how fast supply can react to changes in demand. We can see the changes in demand coming. We can see electrification. This is happening, whatever your politics. And there's only one way to move that power, really, and that's copper. Deficit forecast by 2035, 10 million tons. That's roughly $90 billion at current spot price, or roughly 18 times the global traded lithium market. Copper is a huge market. It takes a lot more to move a market this big, but move it is going to. And I believe having leverage to copper is the right thing, and I believe that leverage will and can come from Coda Minerals as well. It's one of the reasons I'm so excited to be doing the job I do. I'm going to explain Coda's assets very simply, because sometimes there is some confusion here. I did a interview recently with Matt from Crux Investor, and I think he was getting a little bit frustrated with the management consultant in me talking about all of these different pieces that come together, and eventually forced me to make it more simple. So I'm going to repeat what I said. There are two assets here at Elizabeth Creek in South Australia. The first is a more advanced copper cobalt project. 2 open pits, 1 underground. The underground is only at 400 meters. This is a good depth to be mining. The challenge sometimes, I'll talk about this in a sec, can be the time taken to get down there. The good news is we have 2 open pits before we do, so the mine plan all fits together very well. It's more advanced. There's a scoping study coming in the next few weeks. We are in the final parts of this study. The second part, the second asset, is the IOCG. Many of you will know us for the IOCG. We hit something pretty spectacular in June 2021. It remains what I would describe as a spectacular technical discovery. Over 23,000 meters of diamond drilling gone into this thing. We're starting to understand it well. We're doing some more work, which I'll talk to in a moment. But ultimately, it's a very, very high reward opportunity. For me, I would be looking at Coda in terms of the foundational asset. It's the one we listed off. It's the one I spend a lot of my time working on and the team's time working on, and that's the copper cobalt. We are, in my opinion, wildly undervalued based on that alone, and there is some reasonably credible independent broker research to back that up. So what have we been doing over the last year? One of the things with mining I find in exploration is that it doesn't always lend itself brilliantly to the 24-second TikTok generation news cycle that investors seem to want these days. But in the year since I last stood here, we just delivered a resource last time, 43 million tons at 1.86% copper equivalent, in addition to the JORC indicated open pit resources, which we did prior to listing. We've taken that resource. We've materially completed a scoping study. And I'd like to think this is not your average scoping study. This is detailed. Part of that is some of the complexities of the project. Part of that is because at Coda we are very detailed people, and we believe in putting good information out to the market with a reasonable basis. You'll see a lot of 100% on this. It's effectively done, bar for some fairly material, but reasonably advanced trade-off studies on downstream processing, which I'll talk to in a second. The mining study. This wasn't easy. We had to find the right people to do this. People with experience in flat dipping ore bodies. These are not necessarily something that is mined every day in Australia, but wider in Africa, in Europe. These are very commonly mined. Once we found the right people, once we got into this, it started to move very quickly. These are good numbers. 26 million tons at 1.86% copper equivalent for total mined mineralization. This is at a scoping study level of confidence, but it is a very detailed piece of work that we've done. Getting down there takes a little while. At the moment, we're into production ore in about year 6 based on the schedule. We are currently optimizing that. We are very confident that we will improve that materially. But in the meantime, there are 2 open pit resources within the mine plan. MG14, undoubtedly, and I think this will always be the first cab off the rank, it's a good, solid, relatively high-grade open pit, starting just 14 meters from the ground, from the surface. Look at that grade, 1.78% copper equivalent from the mine mineralization. That is very, very high compared to globally mined open pit grades at around about 0.2 to 0.3%. Windabout, the more challenging of the 3 deposits, I will say. We are looking to push as much of this to the back of the mine plan, but there are 4 pits currently within that mine plan, and they can fill in some mineralization before we get down to Emmy Bluff. I call it the less good of the deposits, but we're still talking 1.7% copper here. This isn't a bad grade when you consider those globally mined open pit grades. So moving on to a relatively complex diagram. This was part of a announcement recently. Let me make this very, very simple. What this means is we know what we're doing with this mineralization from the point it hits the ROM pad. Obviously, I've just talked to the mining, so we know up to the ROM pad. Crushing, milling, flotation, it behaves very well. We're getting over 90% recoveries of that cobalt in particular. The copper recovery is also relatively solid on a global scale. And then producing a concentrate. There are companies that would stand up here and tell you that they'll sell a copper cobalt concentrate and hope that you don't know the difference. But copper cobalt concentrates can be challenging to sell. We will likely sell some, especially from MG14, which has a lower cobalt content during the first year or two. But then, in my opinion, you want to be going downstream for a couple of reasons. Going downstream gives you access to future grants. There's the critical minerals grant at the moment, which we're currently applying for. There is also the ability to control your product and your marketing mix and to be a master of your own destiny. This is very important. We know how to do this using pressure oxidation. We know how to do this using Albion. We're currently finalizing a study on non-ox, which to my mind is the holy grail. This is the perfect mix of producing a high-grade copper concentrate, eminently saleable, reduces capex, and producing a downstream battery-grade product in zinc carbonate and cobalt sulfate. We've got a little bit more work to do on this. It'll be done within the next few weeks, and then the scoping study will be finalized. This is a great project. It doesn't require complex pyrometallurgy. The back-end processing remains relatively small. You've got an incredibly high-value product coming in that concentrate with the cobalt. The cobalt is kerolite. It's pretty much a pure cobalt sulfate. So it is pure cobalt sulfide, so it processes very readily. So I talked about the IOCG. I'm just going to finish off that briefly with a couple of minutes to go. This is the spatial relationship. It's not that easy to explain, but effectively there's a huge copper system here, and the IOCG sits beneath the ME Bluff deposit. I do get a few people coming up to me and saying, oh, you're never mining at the ME Bluff deposit's at 900 meters. No, it's not. It's at 400 meters. The IOCG is at 800 meters. What are we doing? Well, we put 23,000 meters of drilling into this thing. We're starting to understand it, but it still covers a relatively small area. This morning we released a whole bunch of pictures. They're pretty. Not many people, including myself, will understand them, but what matters is our consulting geophysicists do. They're currently processing this work. The ANT, the ambient noise tomography, worked extremely well indeed, and we're now processing that. Tight space forward gravity kicking off hopefully next week, actually, probably ahead of schedule. And we are trying to stack the cards in our favor to understand this system. When you have drilling and geophysics to correlate against, you start to get a much better picture of what's going on, and then we will look at the best ways to commercialize this going forwards. Our focus is on the copper cobalt, but the blue sky, incredible amount of potential here, and a fair amount of our energy remains on the IOCG, just for the avoidance of doubt. Some of these intercepts were fantastic. You know, you've got about 69 meters over 1.5% over 2 loads. There are a couple of intercepts well over 3%, but it remains a very live opportunity with this. There are significant additional targets across here, and it remains very exciting. So just to finish, I've gone a little bit over time, or certainly over my planned time. 3 minutes to go? 30 seconds to go. There we go, I got there. Why invest in Coda? We have a wonderful foundational asset in the copper cobalt. We have incredible blue sky in the IOCG. We have $7 million in cash. We have a very hard-working team. Matt Weber, our exploration manager, will be at the booth, as will our chief analyst, Katrina. We have a fantastic board, a huge amount of energy, and we're in the right place at the right time. So thank you very much.